Hi students, today we are going to discuss about the chapter unit 3, that is value of supply. In this session, we are going to discuss about the introduction to the value of the supply, the meaning of the value of the supply, the definition of the value of the supply, and also we are going to learn about the valuation rules as been prescribed by the CGST Act of 2017. So let me just initiate with the conceptual meaning here. What is value of supply here? Now, before we learn the meaning of the value of the supply here, value of supply here is seen to be one of the critical concept in GST, as it helps to determine the GST liability for both the supplier, that is a seller, and the recipient here. So, in this context here, the goods and service here, services tax in India here defines the value of supply as the monetary worth of the goods and services which has been provided by a supplier in a taxable transaction. So, therefore, the value of the supply here is being determined based on the transaction value. That is, the formula here of value of supply is equal to the value of supply Vs is equal to TV plus certain elements. So, TV here basically here it means the price paid or payable for the product. Moving on to the definition what is being given under GST Act of section 15. What is value of supply? Value of supply basically here it implies the transaction value, which means the price paid or payable for the supply of the goods and services when the supplier or the recipient here are not related and where the price is said to be the sole consideration for the supply. No doubt here the value of the supply here basically here it is a transaction value for the supply of goods and services. But in order to determine the transaction value here, there are two conditions to be satisfied. What are those conditions? The first condition is the supplier and the recipient should not be related, and the second important condition is the price is the sole consideration. Moving on to the conceptual meaning of transaction value. Now, just now we learnt about the definition of the value of supply, where the value of supply here is being determined on the basis of transaction value. So, as the name itself indicates here, the word transaction value here simply means the price what is being paid by the recipient, or in other words the value which the recipient pays or he shall pay for the supply. Now, what is supply here? Supply basically here means goods and services here. Now, let me explain the concept transaction value with an example. Suppose say you go to a furniture store and a customer here he purchases a dining table from you, and the customer here pays rupees 10,000 for the table. In this case, what is your transaction value? In this case, the transaction value for the GST purpose will be rupees 10,000, which implies and represents the actual price paid by the customer. Suppose say the rate of GST is given as 18%, then what will be the amount of GST calculated? Your amount of GST will be 18% on rupees 10,000, which is equal to 1,800. Moving on to conditions for the acceptance of transaction value. So, there are certain conditions to be satisfied for acceptance of transaction value. Following are the important conditions. First condition is transaction value is a basis for valuation. Under section 15 subsection 1, it is clear that a value of supply of the goods and services shall be the transaction value for both supply of goods and services. For example, Ramu supplied goods worth rupees 1 lakh to Joy and Company. In this particular case, your transaction value or your value of supply is equal to rupees 1 lakh. Second important condition, price actually paid or payable. Price actually paid or payable simply means that any amount which has been paid or payable depends upon the contract which has been entered between the supplier and the recipient as per the agreement. The third important condition for the acceptance of transaction value is nexus between the amount received and supply made. That means whatever the supply made here, it must be related and it must be connected to the amount received as well as the supply made. Next important condition is price is sole consideration. Yes. So, price basically here it implies the consideration which is expressed in monetary terms and represents the value of supply of goods and services. The last condition for the acceptance of transaction value is supply and recipient should not be related, which is one of the most important condition. What do you mean by supply and recipient should not be related? Which means that they should not be the directors in a company, they should not be the employers or employees in a company here. Moving on to how to calculate transaction value or the value of taxable supply. As we studied that the value of supply of the goods and services shall be the transaction value of both goods and services. Now, let us try to understand how to calculate the transaction value. The following are the steps undertaken in order to calculate the transaction value. The first step is determining the value of taxable supply or the transaction value under section 15 subsection 1. The second step is we need to know and understand what are the inclusions that is to be made in the transaction value. We also need to understand what are the deductions which has to be excluded from the transaction value while calculating the value of the supply which is being given under section 15 subsection 3. And the next important step is the GST valuation rules in case the value of the supply is not determined under section 15 subsection 1. And the next step is government can notify any other method here to determine the value of the supply under section 15 subsection 5. Now, let me now in detail explain you the steps what is being taken in order to calculate the value of supply here, or what is called as the transaction value. The first step is determine the value of taxable supply or the transaction value. As you all know that transaction value is nothing but it is the price paid or the price payable here by the recipient for the product here. So, when a person here has been purchasing, here any article here, your transaction value here will become the price paid, that is the value of supply. Now, what should be the inclusions in the transaction value? Now, to the price paid or payable by the recipient here, there are certain inclusions what is to be added in the transaction value. What are those? It includes any taxes, duties. Secondly, it also includes the payment here which has been made to third parties by the recipient on behalf of the supplier, and it includes the incidental charges, that is those charges which has been directly related to the manufacture of the product here, like commission charges or packing charges or warehousing here. And transaction value also includes interest, late fee and the penalty for the delayed payment. Now, let me move on to the next step, that is exclusions in transaction value. Now, what do you mean by exclusions in transaction value? The word exclusions in transaction value simply means that there are certain items or deductions here which is not to be included while calculating the transaction value. So, those are the discount which is being given at the time of the supply. So, if such discount here is being duly recorded, you need to exclude it. So, continuing the exclusions in the transaction value here. So, I mentioned that it is the discount here which is to be excluded in the transaction value as the discount here which is being given here at the before which is being given before or at the time of the supply. So, such discount here is being initiated depending upon the agreement here what is being entered into by the supplier and the recipient here. And the next important point to be remembered here is ITC, that is input tax credit, which is been attributable to the discount on the basis of documents which has been issued by the supplier. Now, what is this ITC here? Input tax credit here is nothing but here it is the discount which has been claimed at the time of the purchases. Continuing the exclusions here, the discount here which is being given before or at the time of the supply here not to be included in the calculation of the transaction value here, and it should not be shown in the invoice also. And when the discount here is being given after the supply here, it is not to be included. If it has to be included, there are two conditions here which is to be fulfilled here. So, the two conditions here are mentioned here in the following slide, where the GST Act of 2017, it provides that if the value of the goods and services here cannot be determined under section 15 subsection 1, then in that case the same can be determined in the prescribed manner as per the rules, as per the valuation rules what is being given under the CGST Act of 2017. So, which means when can the GST valuation rules can be used? GST valuation rules can be used when it is not possible to attain the transaction value. Secondly, when the conditions what is essential for the acceptance of transaction value is not fulfilled, then the GST valuation rules are applied. Moving on to GST valuation rules, which is being determined and given under section 27 to 33 of 2017. Now, this valuation rules, talking about the introduction of valuation rules, GST valuation rules are nothing but these are the valuation rules which are notified by the government in order to determine the value of the supply of the goods and services or both, and these rules notified to provide the valuation methods which has been given under section 15 of CGST Act of 2017. Now, let me explain in detail the valuation rules. Now the 8 valuation rules. So, section 27, I call it as rule 1 here. So, rule 1 of the valuation rule talks about how to calculate the value of the supply when consideration is not wholly in money. So, in this particular case, your taxable value of the supply will be the open market value of the supply. What is open market value of the supply? Open market value of the supply simply means the total sum of the consideration. In case, suppose say the open market value is not available at the time of the supply, then the rule 3 and 4 will apply to calculate the taxable value of supply. For example, let's say Mr. A, he sold a motorcycle in exchange for an old motorcycle. Now, the new motorcycle which he bought without exchange is being sold at rupees 90,000, and with exchange offer the motorcycle was sold for rupees 65,000. In this particular example, what is your value of supply for rule 1? In this case, the value of supply will be rupees 90,000 and not 65,000, because the open market value of the motorcycle is rupees 90,000. Moving on to rule 2, that is 28. 28 of the GST valuation rule talks about the supply between related persons. Now, when the goods or services are delivered and sold or supplied to a related person, then what will be your taxable value of supply? Your taxable value of supply is equal to the open market value of such supply. Second option, suppose say the open market value is not available, then your value of the supply of the goods and services will depend on the kind and quality of that product. And the third option is, if the value is not determined as per the kind and quality, then rule 4 and 5 will apply. Moving on to valuation rule 3, where it talks about where the supply of the goods and services takes place through agent, how you are going to calculate the taxable value. Now, when the value of the supply of the goods and services takes place between the principal, then your taxable value will be the open market value of the goods. Or second option is, to calculate the taxable value, we can take the value as 90% of the ultimate selling price by the agent, where the customer and the agent are not related to each other. Example, suppose A is supplying goods to his agent, who sells those goods for rupees 10,000, and another seller, he is also supplying same goods to an agent and he charges rupees 8,000. In this particular example, your taxable value of the supply can be considered by Mr. A either rupees 8,000, or he will have another option to exercise to consider the value to be 90% of 10,000. That is, 10,000 is the goods sold. And suppose say, if it is not possible to calculate the taxable value as the second option, or if the value is not ascertainable by applying the above option or the above rule, then rule 5 and rule 4 will be considered. Now, what is this rule 4? Moving on to next valuation rule, rule 4, that is, it talks about value of the supply of the goods or services or both based on cost, which means your taxable value of the supply will be calculated based on cost. Now, let us understand how to calculate or what are the options available to determine the taxable value of the supply. Now, when you are not able to calculate the taxable value of the supply from rule 1 to rule 3, then you calculate the value of supply with the help of rule 4, that is based on cost. So, what is this rule 4? As per the rule 4, which talks about where the supply of the goods and services is based on cost, so your value of the supply will be 110% of the cost of manufacturing, or the cost of acquisition, or the cost incurred which provides, or the cost incurred provisioning of services. Now, let us understand rule 4, value of the calculation of the value of supply based on cost. Now, suppose say Mr. A, he bought a pen worth rupees 500 and he is not able to calculate the value of supply. So, in this case, your value of supply will be considered as 110% of the cost of acquisition. What is your cost of acquisition here? The pen, the cost of the pen, which is 500. So, when you apply the rule 4, 110% of 500, your value of the supply will be rupees 550. Moving on to rule 5, valuation rule, which talks about the residual method for determining the value of the supply of the goods or services or both. So, where the value of the goods or services or both cannot be determined under rule 1, that is based on the open market value, and where the rule 4, where the value of the supply of rule 4 cannot be determined, then we follow the general provisions under section 15. Continuing the residual method for determining the value of the supply of the goods or services or both. So, provided that in case of the supply of services, the supplier may opt for rule 4, that is based on cost. Okay. And moving on to the next option. Now, the last option here given to the supplier is, if he is not able to calculate the value of taxable supply as given in rule 4, that is based on cost, then he shall determine the value of the supply using reasonable means which must be consistent with the above rules, that is rule 1 to rule 4 and section 15 of the GST Act of 2017. The next important point to be remembered under valuation rule 5 is, there are certain supplies which are currently here under some abatement value. What is abatement value? Abatement value, basically here it means that where the value reduces here, and they can be formed or they can be used as a base for determining the value of the supply when any one of the above methods which has been prescribed under CGST Act of 2017 is been unavailable of specific reasons, then this rule may be applied. Then it also says that it provides the value of the taxable supply will be equal to cost plus 10%. Now, a standing instruction to be noted here is, this rule applies to both goods and services which is being supplied. Moving on to rule 6. The rule 6 GST valuation rule talks about specific supplies. Now, what is this specific supplies? There might be some certain listed supplies or certain categorized supplies as per the Act. That is, the supplies which are currently under some form of abatement of value which are found in this rule, namely the supply of the services involving the sale, purchase of foreign currency. So, in this particular case, or the calculation of the taxable value of supply in case of specific supplies will be option A. Either you take the difference between the buying and the selling rate which has been published by the RBI, or in case the reference rate is not available, then 1% of the gross Indian rupee value of the transaction is being taken into consideration. And also another important point to be noted here is, where transactions here is not possible to convert into Indian rupees, then 1% of the lesser of the Indian rupee equivalent of each currency is exchanged. Then another option B is being given to calculate the taxable value in case of specific supplies. That is, 1% of the gross amount up to rupees 1 lakh, or 0.5% after rupees 1 lakh up to rupees 10 lakhs, and this option once exercised, it cannot be withdrawn during the financial year. Moving on to rule 7 of the GST valuation rules given under CGST Act of 2017. This rule talks about the service of pure agent. In case of the service of pure agent, how to calculate the taxable value of supply? So, first let us understand the service of pure agent. Here, agency supplies are different from pure agent in relation to the valuation of supply. Now, this rule 7, that is service of pure agent, it applies only to the supply of the services, and it provides for the exclusion from the valuation of any supply of certain cost, and it also excludes the expenses only if and only the following tests are satisfied. Now, what is the two tests which has to be satisfied? There must be the contract which subsist or exist between the third party and the beneficiary of supply. And the second important condition or the test is the actual recipient should use the supply for the purposes of beneficiary. And here the beneficiary of the supply here becomes liable to pay the third party, where he authorizes either on actual basis the payment which is to be made to third party by actual recipient. And moving on to the other important key points with regard to valuation rule 7. Now, this beneficiary here, he should be aware that the supply is by the third party and not by the actual recipient claiming the reimbursement. And also, invoice of the actual recipient indicates separately the reimbursement claim, and the actual recipient claims actually only from beneficiary, and actual recipient supplies the goods and services which is independent of the reimbursement supplies, Moving on to rule 8, the valuation rule, which talks about the exchange rate can be used in case the taxable value of the supply cannot be determined. So, whenever there are transactions which has been undertaken in foreign currency, so that can be translated into Indian rupees. Due to availability of multiple exchange rates such as RBI rate, SBI rate or FDI rate here, customs rate. Now, this rule, that is where exchange rate can be used, strictly prescribes the rate of exchange what is being prescribed by the RBI and also the date of the rate of exchange. So, to conclude, the value of supply is one of the important determinant factor in GST, where without value of the supply, you will not know what type of taxes should be levied, as we have 3 types of taxes which are being levied under GST, that is SGST, CGST and IGST here. So, therefore, value of supply becomes very important here to calculate the tax liability of the supplier, and again it depends upon the supply transaction, whether it is interstate supply transaction or intrastate supply transaction. Thank you, students.